As the global economy picks up and consumer confidence returns, how can we expect to see marketers changing their branding once more to reflect this?
Well, I came across a nice quote, which was actually to do with Obama, curiously enough, which is that, if you're a fish swimming and a shark comes up, you don't have to swim faster than the shark, you just have to swim faster than the other fish. So, I think companies are going to have to sort of really look out, and they can do this in three main ways, I think. Firstly, and this may sound like a cliche, is really focusing on genuine value for the customer. I think the recession's made customers even more cynical. So sort of empty promises which you can't then deliver, people will see through this. So they're looking for brands they can trust, they're looking for honesty, and they're looking for authenticity. Two examples of this. I actually worked with the firm Caterpillar, which introduced Caterpillar boots, shoes for the youth market in Europe. But they very much based this on the Caterpillar American brand, its industrial heritage. It was well made, well priced. People could sort of believe in its origins. It wasn't just a brand created out of nothing. Another example of real integrity in a brand is FC Barcelona, the football club. Last week I was at a marketing conference there, and amongst other things they actually have UNICEF on their shirts. So they gave up probably something like 30 million euros to do this. And this is because of their commitment to the society, to the local community, to the Catalan spirit. And they're actually owned by over 160,000 people. They're not owned by an oligarch. So in other words, what they do with their brand really reflects its core values, and people understand that. I think the second thing is companies that have maintained their investment will do better coming out of the recession. There's a lot of evidence for this, that they do relatively better during recession and they come out of it faster. And in the UK, Marks & Spencer, very well-known brand, it's had its troubles in recent years, they, and people criticise them for this, continued to keep their premium positioning, and they invested in brand-building advertising, which was quite a brave thing to do. And as a result, actually, they're now trading at something like nearly 50% above the European retail index. So this is this thing of maintaining investment in the brand, even during bad times. And I think the third thing is to consider careful brand extension. Today there are just too many brands chasing too few elusive consumers. So if you can extend existing brands, you get greater focus, and it's faster and it can be more economic. And again, at the awards ceremony, one of the submissions was from Waitrose, which is a upmarket premium food retailer in the UK, very strong reputation. They introduced a new range called Essentials, which they call a value range. So this is not a cheap product, it's a completely new line, very well targeted, and it's done incredibly well. It's now 16% of their overall turnover. And the core business grew as well. So they didn't damage the core brand by actually doing this. And they're now growing faster than their four main competitors. So in summary, I think those three things: firstly, providing real, genuine value that basically consumers believe. Secondly, maintaining your investment and actually being brave enough to back it with marketing expenditure. And thirdly, greater focus by extending your brand carefully, not overextending into non-credible areas.